Just looking at some of the most recent developments that have come to the fore, everyone's really focusing on Spain, the Spanish bond auction yesterday, the fact that it could be deterring cutting down on the budget deficit until 2013. What is your sense in terms of how markets are going to take this news down the line?
Well, it does appear, as you were pointing out earlier, that some of the negative sentiment surrounding Spain has dissipated. But the more we look at this problem, the worse it appears to be, because basically the banking sector has been buying huge quantities of bonds over the course of the past 3 or 4 months. As the cost of those bond yields goes up, it's going to be even more difficult, I think, for the government to sell bonds in the market to private sector investors, which in turn is going to push up the cost of debt. Making the fiscal consolidation process in Spain even more difficult. And we can imagine a rather nasty spiral in which the banks start to become the big black hole at the heart of all of this, because they're holding debt which is increasingly in jeopardy. So I don't really see much good news on the Spanish front in the short term. What we need to see is growth, of course. And given the austerity measures that the government has put in place to try and curb the budget excesses, I'm afraid that's not going to come through anytime soon. So, let's wait and see. I think before too long, the markets will be taking a much more negative view of Spanish events.
So, Peter, US Treasury Secretary Timothy Geithner coming out and saying that we need to strike a balance between austerity and the likes of stimulus. And I suppose this is probably more so a criticism to the ECB and the European Union as a whole, because austerity has been the name of the game for quite some time. Do you think that a balance could be struck? We know that Greece has taken the brunt of the pain. The other peripheral Eurozone countries, do you think they're going to be dealt a much softer hand?
Well, I think they will be dealt a softer hand, that's true. But I still think that austerity appears to be the name of the game, because I think if you look at across most European capitals, they tend to look to Germany and say, well, Germany wants us to put in place more austerity, that's what we're going to do. Now, perhaps it's not as much austerity as Germany would like to see, but nonetheless, it is enough to take the urge off growth. And as you pointed out, Tim Geithner is giving, I think, a not very subtle warning to the Europeans that they risk derailing the European recovery and indeed the global recovery if we carry on down this path. So, I think that 2012 is going to be critical in determining how European governments manage to strike this awkward balance between generating more growth whilst at the same time imposing some form of austerity, which quite clearly is needed in many cases.
I mentioned this a bit earlier, Peter. I mean, the Bank of England minutes coming through, and only one member out of the Monetary Policy Committee still supporting quantitative easing. Do you think we should actually see more monetary policy members wanting to embark on more quantitative easing in the UK, or do you think that the economy is now strong enough to stand on its own 2 feet?
Well, it's questionable as to whether the economy is strong enough. I think that one is very much an open question, and it will take some time, I think, before we get a definitive answer to that. But look out for the Q1 GDP numbers next week, which are widely tipped to be flat to marginally positive. I mean, if you get that kind of outcome, then I think it's entirely possible that the Bank of England may abstain from further QE in May. But I think what was significant was that the one guy who has been pushing for QE for quite some time now, Adam Posen, was the one guy who changed his mind this time around. And I think, therefore, I think that is a signal, I think, that the thinking on the committee is increasingly, given the high levels of or high rates of inflation that the UK is currently experiencing, perhaps now is not the right time to be engaging in more QE. So
we've also seen the German economic sentiment numbers surprising to the upside somewhat, so a bit of positivity coming through there. The truth is, we're actually starting to see a mixed bag of sentiments on a global level. So really, really tough to say that some of these numbers could actually be sustained in the future. Would you say, Peter, that we're sitting in a good space, that we can actually sustain some of the growth, at least, that we've been experiencing over the past year?
Well, I think the key question is to what extent are we likely to experience a shock? I mean, if you look back over the course of the last 6 to 9 months, the big problem that we faced certainly in Europe and I think in other parts of the world too has been the uncertainty shock arising from the Eurozone debt crisis. If we can avoid a major catastrophe in the likes of Spain or possibly Italy over the course of the next few months, then it's entirely possible that we will start to see slightly stronger growth coming through. But it's not going to be very strong growth. I think the best we can hope for is a modest recovery. Certainly we're not going to get back on our feet anytime soon, primarily because many European countries, as we've just discussed, are imposing quite significant austerity programs which will crimp growth.
Yeah. So how concerned are you, Peter, with regards to the Chinese economy? I mean, that first quarter GDP number perhaps not strong enough for some. Others say that we are overreacting. 8% growth is looking good.
Yeah, I mean, I think the government's target is for 7.5% growth this year, and I think that's eminently achievable. And indeed, we started the year off pretty well. It's possible we might even overshoot. So now I'm not overly concerned about the numbers for China at this stage. I think the problem is that markets tend to get fixated on the fact that we've had 9–10% growth over recent years, and they want to see more of the same. That clearly is unsustainable. The Chinese authorities recognise that the economy has the potential to overheat, and they're just taking some of the heat out of the economy. So I think an 7.5% to 8% growth rate is something we're going to have to accept is a pretty decent number in the context of things, and I think that would certainly be consistent with a fairly soft landing in the Chinese economy, which would certainly go a long way towards dispelling the recent fears that we've had that the economy might in fact boom and bust.